Hey everyone, welcome back. Another episode Talking Success. Now, I was introduced to Katie, who I'm going to formally introduce in a minute, probably about a year ago. We were just chatting, saying it's been ages since we caught up. Katie operates a business called Koola Capital, and they operate in a very much needed segment of the market. And I'm not going to do any spoilers here. I'm going to let Katie tell her story. It is Katie Dodge, not Doge. I was corrected on that, and I otherwise we're going to start mimicking sort of meme coins and what have you. But we're not going down that road. Katie, it's amazing to have you. Thanks so much. Appreciate it. It's like a year since we've spoken, so I can imagine the business has kind of changed, and you guys have kind of grown and probably made some mistakes, probably learned from them, and not make the same ones. But before we get into all of that, I'd love to get an intro, just a bit about you and your background, and then a bit about sort of Koola and where you guys came from, what the name means, who you service, etc., etc.
Fantastic. Yeah, thanks. Yeah, thanks so much for having us. It's amazing. It's nice to check in sort of that year later and see. I always tell people, they're like, "Oh, it's amazing what you're doing," and I'm always like, "If I'm here next year, then you can sort of say amazing." And it's getting to the point where they said you said that last year, and I'm like, I still feel that way. But yeah, thanks so much for having us and just sharing our experience. So yeah, my name is Katie Dodge. Unfortunately, not like the car. I like to go old school with the car rather than the stable coins.
Yeah.
But yeah, I'm one of the founders of Koola Capital, so it's difficult to tell the story without my partner Oliver. We were friends at uni, so both classic finance and accounting. And he went into sort of more auditing or banking, and I sort of took a little bit of a different route. But we worked together in the informal economy before, more on a volunteer basis at university, and then yeah, we sort of thought, okay, what is a challenge that can be solved here? And so after uni, I went into sort of more working in the informal economy, and he went into banking. And it just really, he came to me about 3 years in as he was sort of finishing his articles and said, I've got this opportunity that I see. The banks are just really not getting it right when it comes to lending in the informal economy. And there's these businesses that are really turning over a lot of money. There's a lot of opportunity, but they're just A, not being serviced, and B, they're not doing it in a way that really promotes sort of long-term growth of the informal economy. So how do we build something that's not extractive, that actually grows the economy and sort of serves people where they're at? And he's like, the market is now because so many people are using Android phones, so there's great access to technology, and there's WhatsApp. Is there not a way that we can do this in sort of a very efficient, margin-driven sort of lens that also has a lot of impact? So making sure that unit economics are at the front. I probably should have mentioned a bit earlier on what we do, because people are like, what?
Yeah, no, that'd be good. We get to unit economics and what have you. That would be great. Yeah, just a really high level, Katie. That'd be great.
But yeah, basically we provide financing to businesses in the informal economy. So we call it the Township Economy because there's various levels of formality in this space. We've been going for about just over 3.5 years now. We've lent out about 6 million rand. So we've got a few war stories in there. But yeah, we essentially finance, there's anyone that's based in the Township Economy and shows a propensity to be able to grow. We provide financing through WhatsApp. So it's all sort of through a 20-minute application process. All documentation can be done through WhatsApp. We process the loans on the back end and sort of manage sort of customer relationships and all of that with a strong on the ground presence.
Okay.
Sorry.
I have so many questions. I
was thinking you're probably going to have to edit that around now. I was like, not the best
No, not at all. We keep this as natural as we possibly can. Let me ask some questions. I'm going to get straight to it if I can. So you mentioned that the banks sort of struggle to service the Koola economy, right? The township economy. Why is that? And what was the challenge that you actually needed to face, or you needed to solve? Was it? I'm going to a couple of prompters here. Was it that businesses in the Koola were struggling to grow because of cash flow? Or struggling to expand because of cash flow? Was it that they required, or they didn't realize that there was this facility available or potential facilities available in order to help them grow. Was it also a literacy side as well? And I mean that with the greatest of respect to everyone that operates in the Kazi in terms of the digital economy, and being able to use not use WhatsApp, but use WhatsApp for business, right? What were the challenges, and why did the banks, or why do the banks perhaps struggle in this area?
Yeah, it's a really good point, especially because lending in South Africa, I mean, I do think there's a lending issue in South Africa. I mean, it's amazing. We've seen businesses that, they can get a vehicle finance, but they can't get any business loans. So I think there's an abundance of lending in South Africa. It's just not really the right kind of lending, or the type of lending that we actually need to be able to grow the economy at a sort of very sort of micro level. So I mean, that really, we did have a lady who had a 500,000 Rand vehicle license financing, but couldn't get business financing. Like it really does happen. And I think, the term of like unbanked that's a lot of people are banked now. I mean, you've seen the stats of how many customers Capitec has, but it's, why are they still not accessing loans that are productive capital? So there's grant advances, there's personal loans, there's retail accounts. I mean, flip, every single business that comes our way, they've got retail accounts with lots of retailers. So there is this access to capital. It's just not really capital that's going to fundamentally grow the business. And I think there's a multitude of reasons, but one is, why would you service a business that needs 10,000 Rand? So the unit economics of that versus just doing and having to do 100 of those versus doing one loan of 10 million Rand. Like the unit economics are a lot better on that. So I think you can't talk about servicing in the space without understanding that you're driven by a very price sensitive market. And how do you actually make sure that you're delivering a product that's of value, and also very customer centric in the way that lending has been very historically traumatic for Black South Africans, because of the way that banks sort of shut them out during apartheid. I mean, it was actually illegal to own and run a business at a stage. So the guys, I mean, spaza shops have been around for ages, and a lot of them actually started, without running them legally. So already, the idea of a business and formalizing it, and then being able to go to a bank where inherently so many just feel like they're going to get rejected off the bat. Yep. And I think there's financial literacy, as you mentioned, in that they don't really understand all of the processes that are involved, and what are the consequences of taking out of this money. And then there's also a risk-taking mindset. So there's an entrepreneurial mindset of like having to back yourself and put something on the line and taking out a loan to do that. So I think it's a very complex sort of challenge that you've got to solve for, which is this inherent sort of mistrust of banks and, what are their intentions? And at the same time, solving for, what is the actual problem, so that we don't lend into a space and actually do more damage. Which many of these personal loans are. And I think some of them now, they can't get business loans because their personal financing is not in a great state. So it's quite a complex issue. And then I think at the same point, a lot of these businesses, as you say, they're actually on WhatsApp. They've got WhatsApp business. They run in townships. They never actually even leave, some of them, to go outside. So, the thought of going into a branch and having to put all this paperwork together, apps, cash flow statements, financial forecasts, management accounts, it's actually just not there. It doesn't necessarily mean they're running a bad business and they don't make money. They just don't have all of the sort of very traditional needs that are wanted by a bank.
So that goes on to my next question, actually, Katie, because you mentioned the onboarding process takes around 20 minutes. What sort of documentation does a business in the Kazi need to supply, and is that a barrier because of what you've just said, that you're not going to have sort of audited AFS, and you're not going to have maybe you haven't registered the company on SIPC, whatever it may be. What is that process, and is that a barrier?
I think bureaucracy in general is a big barrier. I mean, I always say it's one of the benefits that we have is that because we had to start the business with very few resources, we did so much of it ourselves. So we didn't pay a law firm to register us on CIPC. We sort of did that ourselves. We added directors ourselves. And I think when you've got that experience, you really understand what other individuals have been going through. You're not just saying, oh, bureaucracy is a challenge and let's cut red tape. You've actually had to experience it yourself as two people that, have got tertiary degrees, and now you're trying to navigate this entire process. How does Qoida work? When the Qoida website is down most of the time, and then you actually have to go physically in person, then that you get there, there's no one there. So a lot of these challenges these businesses face to becoming registered and more formal is experiences that we've actually had to go through ourselves. So I'm grateful that we had that experience. It's tough learnings. But I think you've got varying degrees of formality in the space. And I think it's something that we tried to match was like, where is the business owner at that stage? So you'll see varying degrees from someone that, has a bank account, but they don't have a business bank account. They're just running through their everyday account. They may even predominantly trade in cash, probably like a Shisanyama store, something like that. They're probably turning over a couple $100 a day, not strong cash reserves. So they're going to the market each sort of day or two. That's very different to sort of, a small business that actually is quite formal, may have won a contract with Engine to be able to provide cleaners for a 3-year contract. They have got multiple staff underneath them. They've got business bank accounts. They've got to be more registered because to win these contracts, they have to be more formalized. So, and in between, there's this varying degree. And what we find is that compliance, the bigger you get, and I think it's not necessarily a barrier to doing business. Anyone can do the business. It's a barrier to scaling the business. And I think that's the challenge we're seeing in South Africa, is that a lot of people are getting to the point of growth where some of these sort of additional requirements actually become too much. And so the scaling to the next stage is the issue, not so much the sort of day-to-day running of the business.
Yeah, and I guess you mentioned one thing just now, which was cash, and cash is not going away anytime soon. I think there's an absolute acknowledgement of that. I think as much as we're trying to go cashless, it's rather as opposed to cashless. Is that still a big barrier? How do you then go and I'll use the word educate, but let's use a better word. Let's inform. How do you inform the Kazi economy and the business owners in the Kazi that there is a different way? Yes, it's going to mean you're going to be digital and you're not going to have the notes in your hand. Yes, it means that you obviously, SARS and various authorities can, see what you're trading. And how do you get around that barrier? Because again, you mentioned something a little bit earlier. You literally taken all the words I was going to use, which is around. I've heard a lot from fintechs over the years saying, people don't trust banks, right? And that may be a fair comment. I've not ever heard anyone in the Kazi ever say that to me, so I'm only hearing it sort of third hand. But I do think there is an element of misunderstanding of kind of where the banks operate and what the regulations are and how safe people's money actually is. So let me circle back around to the first part of that question, which is cash. Is it still the primary driver in the township economy? Are you seeing a shift? And if so, is it gradual? Is it we hockey sticking? Where?
I want to circle back to that because I want to touch quickly on that trust point of banks. And I think it's important to understand in what context. I think they trust banks to hold their money. They know that I'm going to put money in, they're going to maybe give me some interest and I'm going to be able to get money back. That trust has definitely been sort of democratized, I would say. I think the kind of trust that I speak to more is that someone's going to have my back. So if I need, if I get paid for a contract 2 or 3 days late, the bank is going to sort of understand that and not just whack on penalties, charges, etc. So there's a trust that they are going to weather the storm with me. They're going to be with me for the long term. They're not in it to sort of get something out of me now. So I think that's the kind of trust that we sort of look at, is that, I think it's seen as very extractive rather than these guys are going to have my back in the long term. In terms of cash, what we've seen is the best way I can describe it is we went for lunch in Site C in Kailicha, a place called Sasa. And in the line, just waiting in the line, there was like every single card, Apple Pay, there was like everything being used right in front of us. I mean, there was like 4 different POS devices going because there's so much fragmentation in the space. And then within that, you had like a slightly older lady, she was paying with cash. Then you had sort of someone that was really young. I mean, they were paying with a virtual card on their phone. It's and then in between you've got someone that pulls out a little bank card from somewhere, pays with that. So it's absolutely, I don't know, I'm not sure if at this point I really know if anyone knows how quickly it's hockey sticking or that, because it's really interesting to see. And I think the younger generations, I think we are going to see a hockey stick more as we see younger people being able to spend quicker. I mean, we see people on their bank statements using PaySharp, so that's being adopted. EFTs for me are more prevalent than card payments. So I think we're seeing a lot of EFTs, immediate EFTs. The bank charges are eye-watering still, but it's phenomenal to see the amount of people that are picking up using EFTs. But I think a large majority still are using cash. I mean, even when we send out some of our loans, where possible, we try to pay suppliers, but there are some suppliers that will only take cash. So I think there's going to be a lot of resistance to it still, and I think we're going to see a long time before we really phase out cash.
So you've just said something, and again, my next question.
Sorry.
No. Listen, it's naturally flowing, right? This is not scripted or prepped at all. Anyone that's listening. Talk about the model without obviously giving away any sort of IP. You just mentioned there that you settled the supplier. So is this sort of a factoring and invoice discounting type model that you operate, or is this you sort of disperse the cash equivalent, and the merchant can then use that for whatever they need to? So what's the model there?
It's a little bit of both, to be honest.
Okay.
And I think that's where we've got to play. And I think that one solution is not going to be the fit all for this. I mean, I would love to say we would just pay suppliers, but as I said, particularly for transport, you hiring someone down the road with a bucky is just, they're never going to write up an invoice and send you an invoice. And, by the time you've done that, you've lost the contract, because sometimes these contracts, particularly awarded by some of the government departments, are, they get awarded on the Wednesday, they're expected to deliver on the Friday. So it takes a lot of time to get 3 different quotes, or it takes a lot of time to get someone that doesn't usually invoice to now draw up an invoice. And it's not really we're not meeting people where they're at.
Yeah.
So I think the model has been evolving to see, how do we build a space where we can verify as much information and sort of manage or reduce risk as much as possible with sort of, paying a supplier directly. But even within that, there's sort of a lot of risk in the supplier. So, I mean, we had one out in, I think it was Gordon's Bay, that one of the suppliers just sort of upped and left. And we had paid the supplier. So there's sort of various risks you've got to manage all around, whilst at the same time building for someone that wants to be able to have a little bit of autonomy. I think that's the sweet spot, is how do you not remove someone's agency and say, you have to do it this way, this is the only way you can do it, otherwise we're not going to finance you. And I think that's maybe a little bit of the trust I speak to, is, legitimizing them as business owners. Like, they have worked with this transport guy for a couple of years. Just because he can't produce an invoice doesn't mean he's not reputable. But how do you sort of couple that with managing risk on our side, which is, well, is the guy going to deliver on time? Are you going to get paid? Are we going to get paid? So it's definitely building towards that. And I think building a financial product that uses traditional mechanisms, but builds it with the context of informality and how we manage risk with that.
And then the risk side, I think there might be people watching this going, that sounds like a risky business. Hey,
when I told my dad I was going to do this, he looked at me and he was just like, please don't put any of your own money in. Now he tells all his friends, he's like, you'll never guess what Katie does.
Wow. Okay, but let's talk about that. I'm sure your dad's probably not the only person that said that to you, right? I'm sure you went knocking on the doors of some of the VCs or the angel investors. They're like, how do you manage risk? And how do you ensure that your default rate doesn't kind of get to the point where it's kind of killing the business?
Yeah. I think we've been really, really lucky. In the beginning, we met and continue to meet with, actually, if any of them are listening to this, I want to say thank you. We've had good people around us that have advised us sort of like on the metrics of lending. So it was very much, I mean, in the beginning, we were like a little bit caught up in that, like, oh, Cape Town, fintech, let's get a VC. It's so exciting. And I'm so glad that we actually didn't take any VC money, because I think we would have been forced to lend more aggressively to meet revenue targets. Our default rate would have spiked up. And I think one of the best pieces of advice we got very early on was, this is going to be a stepped approach to building the business. So you need to lend out, and then you need to be able to refine your systems, grow your internal checks, and then be able to lend out more. So getting that advice early on was very paramount to us being able to build something that our default rates are actually getting lower. So I mean, that's such a great sort of path to be on. I think the other important thing is to understand like the market segment. So in the beginning, we were like let's lend to everyone. Let's try everything out. Let's really understand how money moves, how it, one person owns multiple different businesses. So how do you work that out? And I think by reducing the segments that we've sort of been focusing on has helped us to really understand a little bit deeper into that segment. So that would definitely sort of be, and I think our risk management, as we've gotten to know that the segments better, has improved a lot. I still think there's a lot of risk, but I think it's how do you manage that risk and build the data, obviously, that improves it over time.
Yeah, absolutely. Well, you mentioned the refining the sector or refining sort of industry that you focus in. Is it more product companies that are selling products rather than services, or combination, or is it sort of more the spa shop route rather than the hairdresser's route? Where are you guys looking?
Yeah, we actually have never done spa shops from day one. I mean, it's an incredibly competitive space. I think there's some great companies out there that are sort of doing fantastic work, to be honest. And the informal economy or the township economy is more than spa shops. And I think if there's anything people take away from this podcast is there's a lot more opportunities out there than spa shops. So we've never done spa shops, but now we focus a bit more on B2B. So this could be, someone that is building shacks maybe, or is building a business, building a container to be able to send to someone else for their business, or could be providing cleaning staff for a petrol station, or delivering sort of stationery to a school. So it's the process really is more contract like focused, I would say, has been sort of the segment that we were within. And I mean, within that, we're still looking at, multiple different industries within that. So I think there might be some refining in months to come, and sort of drilling down into one vertical before moving across. But I think that's been really key for us, is actually to stay focused. It's difficult to stay focused because there's so many challenges to solve, and there's so many issues, and you also feel this pull to sort of solve every challenge of the business owner. And it's been quite difficult to say, actually, we just lend. That is what we do. We lend. And all of the products that are sort of in the future line is actually, how do we reinforce a better lending model? Because there's just the temptation to go out and do all sorts of other fun things. But yeah, we're sticking with that for now.
There always is, right? There always is. Oh, listen, we can do that. We can do that. Yeah, no, absolutely. Right at the beginning, Katie, you mentioned that the not necessarily the model, but you have people actually in the townships, in the Koola economy. Are they sort of brand ambassadors, or are they salespeople that are sort of walking around talking to potential merchants about this type of your solution? What does that look like?
Yeah, I think anyone building in the space, you actually have to be in the ground. I think we personally met with like the first 100 businesses. Either Ollie or myself met with every single one of them, and for quite a length of time. I think before we even actually started Koola, we went with MZ. So MZ is with us at Koola. He's been with us actually since before we gave our first loan. He's phenomenal. He's based in Kailicha. So I mean, before we even lent one, we did a bit of a pilot the year before we started, but before we really went into lending, we met with lots of businesses to understand, is lending actually going to solve the challenge? I mean, as you say, it's very much one thing to hear it from a third person, like, oh, they just need money. I don't think they do just need money. That's not just the case. Money's not going to be the silver bullet that solves every single business. But it is important. So we spend quite a lot of time in Khayelitsha. We were there running the weekend before last, I think it was. And it's quite important. The whole team comes in, we all go into Khayelitsha. Everyone's, even the tech guys, they must come in and see what they're building for. So that's always been really important to us. And then in terms of like, our customers have been phenomenal, to be honest. They've grown with us. We've seen businesses grow alongside us. And I think they understand how difficult our position is. I mean, we had one business come to us last week and say that she had collected 45 orders for meat and she had only been paid by 25. And she was sort of like, I don't know how you guys do it. I was like, look at the gray hairs.
Yeah, absolutely. Yeah.
So I think they understand it. And I think having understood it, they have been really supportive of us. So, I mean, word of mouth has been really strong in the space. And it's an interesting one with lending because no one wants to recommend someone that they think will be a bad lender. And when they have, that's been like really detrimental for their relationship. So you've got this sort of like willingness maybe to be able to share Koola, but also this reluctance because we don't want to ruin our relationship with Koola. And so we built a very relationship driven sort of approach to scaling. And I think what's been really amazing about the fact that you have to step grow our loan book is at the same time you can sort of like manage that word of mouth along the side. So I'm really thankful. Actually, our customers have genuinely walked the journey with us so far.
It's amazing. It really is. I remember when we talked sort of a year ago, it was just post-pilot, I think. I think you guys have just kind of got a few merchants you were lending to, and it's amazing to see that. What does the future hold? Listen, we're not going to do crystal ball stuff. Let's talk the next 12 months, right? So I know before we got on here, you said, it was a success when someone said to you, oh, you guys are still there. Yeah, absolutely. Listen, it's no mean feat in this market, right? There are challenges, whether it be for tech entrepreneurs like yourself or whether it be for people owning hair salons I don't know why I keep saying hair salons. Clearly, I've got no experience.
Got a bit of a complex there, maybe.
But anyway. So, there are challenges though. This economy is very, very hard. We've got inflation and we've got interest rates and what does the next 12 months look like though, from your side?
Yeah, and I think that's where time in the market is so crucial, actually, because every single time, each loan, good or bad, you experience something new, you understand something new, you have these hypotheses that you thought would hold true. Social capital, a lot of people hop on about social capital was so strong, and it's like, it has its limitations. It works in this way, it doesn't work in that way. So I think we're constantly testing new hypotheses about what we think will work in the market and also what's needed by the market. But as you say, it's still volatile. And how do you build stability into a volatile market, I think is ultimately what we're trying to do. For the next 12 months, it is actually I'm excited for the next 12 months. We've got a lot of tech. I don't know if I should be doing this, but there's our whiteboard. So that's sort of the tech roadmap for the next 12 months. So there's a lot of new back end and front end sort of coming through. And then it's just to keep building around the entrepreneur. So really building out everything from the back end to make us improved our fraud management or sort of fraud detection, risk management, being able to bring in more data points from different sources, I think is really the goal for the next sort of like 12 months. And then to grow our lending book. So at the moment, we sort of sit at about 2.2 million loan book at any one time. I think the goal for the next 12 months is to sort of increase that to about 8-9 million. And I think it's totally doable. I think I've said I think so many times, but I really do think we put together a team at the moment.
All the time. I have to correct myself usually. I'm like, no, I don't think I know. Yeah, okay. Go on.
Like, is that the thing they can edit out?
Yeah.
We've put together a team that really understands the market now. And so it's about getting the tech right and then growing incrementally. So it's a really exciting space. We will be fundraising, and we're putting sort of some of our strategy together at the moment to see what does the next raise look like. It's again, someone early on said to us, with a lending business, you are always going to be raising because you're always raising for your loan book.
Yeah, absolutely.
Yeah. So we've got a bit more capacity in our current credit line. So we have room to still grow. And then I think, in the next 2 to 3 months, we'll be looking to sort of grow from an equity perspective and a debt perspective. But I think for us, it was really about it's not just about dispersing the money. It's how do you build the system that actually enables the next level of disbursement. So are you putting in a really strong foundation? Because as you said, what if our default rates spike, and we need to be able to absorb that. So I think in some ways we're really lucky because the traditional or the sort of more Silicon Valley fintech route of just build something scrappy and get it out there and test it. And, that worked in sort of the proof of concept, but now you've got to build something that really, can stand up to a banking sector. If you want to get acquired one day, you need to make sure that you've got FICA in place, that you do your KYC properly. And how do you build it in such a way that doesn't add friction to the process, but actually caters for the informal economy and what people, they're on the move a lot. So that's why WhatsApp is brilliant, because they're delivering orders, they're moving around. So they can pause and then, literally at a red light, hopefully not actually moving, they're in the passenger seat, but, be texting us documents. So how do you build for being acquired, hopefully by a formal space one day, but but do it in an informal way.
Well, Katie, I could probably go on for ages. Well, I know I could go on for ages, not probably. I didn't think I know I could go on for ages. We very, very broadly touched on sort of the compliance and the fraud sort of aspect, which clearly is a big thing. Maybe we won't wait a year though. We'll do that in the next few months. I want to thank you. I'm actually hosting a Chatham House roundtable. SME Forum, Global Forum, which is part of the G20. And it was all around this topic. So actually, selfishly, I got loads out of this conversation. And with your permission, I'm going to rehash some of it and probably use it tomorrow. And they're going to go, wow, he's such a smart guy.
Please.
I will give credit where it's due. I promise. I'm not one to steal people's IP. So I really do. Thank you. It's been super insightful. We wish you and I all the best for the next sort of 12 months. Let's not leave it that long. But if people want to sort of find out more about Koola Capital, more about you, are you kind of more of a LinkedIn person or an X person or a TikTok, or where do we find you?
I'm like one of those sporadic LinkedIners, that gets the fever and then thinks I must, and then maybe posts twice and thinks this is it, and then retreats very, very suddenly. So none of us, unfortunately. I think that's probably, we're just too busy building. That's what I always tell people. But I am on LinkedIn, so you'll find, Katie. So I'm Katie Dodge. My co-founder is Oliver Steckoven. So if you also want to look him up, and then you can just check out our website. So it's Koola Capital online. We're not strong at TikTok. We haven't quite gotten to that yet. Yeah, I mean, my co-founder doesn't even have Instagram.
Okay, yeah. I think I have. I'll stick to one channel, thanks. I'll stick with LinkedIn. It kind of suits more my generation, I think, than maybe others. But Katie, listen. Best of luck. You're on a phenomenal journey. It's amazing to see people solving real issues and making a real difference in people's lives. So kudos to you and the team. Kudos to Koola. There you go. You can kind of.
Hi, you've already done the marketing for me.
It was a bit cheesy, but yeah. But again, great to have you on, and we look forward to seeing what you guys do in the future.
Amazing. Yeah, thanks. I really do just love sharing what we do. It's an exciting space. So yeah, we'll chat soon.
Thank you very much.